Hi, Karen Deis here, and this is the May 2016 Mortgage Currency Rule and Regulation Update. Now, I have been in the industry long enough to know that when the mortgage rule pendulum swings one way, it swings back the other way. It just doesn't stay there forever. So it's finally swinging back the other way with the agencies relaxing some of the rules and they're actually making an effort to make it easier for people to qualify for a loan. Now, not 2007 crazy type of deal, but enough to make a difference. So let's start by talking about the elephant in the room, trending credit. So Fannie published a 25 question FAQ, 14 of them relating to trending credit. First of all, you need to learn some new terminology. For a person is called a transactor, or there's a person that's called a revolver. Lenders will now be able to see the historic views of payment histories, and they have to consider whether that person is a transactor or a revolver. So here's the skinny on this one. It's a game changer for credit repair companies and loan officers who think that they can get their credit score easily increased by just a few tweaks. It isn't going to happen anymore because it's going to be a trending overall credit score. So while Fannie claims that it's not going to have a significant impact, we won't know that for sure until June 25th when the DU 10.0 is released. And I believe it won't be long before a trending credit history will have to be reviewed by underwriters as a possible risk in regards to a borrower who is a revolver. And we also think that Freddie is going to be implementing it too, because their underwriting system is now changing from loan prospector to loan advisor. So they may be implementing that change when they update their system. So a positive change for FHA underwriting is the new rule regarding student loan repayments. So here's the dealio. As of June 30th, you can use 1% of the outstanding principal balance as the monthly payment, as opposed to 2%. Underwriters have the option to implement it right now if they want to, but it's mandatory as of June 30th. There's also a clarification that if the payment shown on the credit report is less than 1% of the outstanding balance, it can be used, but as long as there is like total documentation as to what the terms are, the loan payment documentation, all those types of things. However, one other caveat, if it's discovered that the loan is not fully amortizing with the lesser of the 1%, the underwriter has the option to increase that monthly payment for qualifying purposes to make sure that that student loan is fully amortized. So be sure you and your processor do the math when it shows up on the credit report prior to it being submitted to underwriting. Another rule change for VA goes into effect on June 1st. If the veteran's income is commission and it's less than 25% of their annual income, business expenses on the 2106 do not have to be deducted from the income. If it's 25% or more, the old rule applies. So go through your files, see if the new rule applies to any of your pre-quals or VA loans that have been denied. Okay, so now I'm sure that you've heard the news about USDA that the guarantee fees, both monthly and annual, will decrease as of October 1st, and it's just not a token decrease. This is huge. So I'm not one that usually advises borrowers who are eligible for USDA loans to wait until October, but in this case, I'd be tempted if I were you to let them know, just in case they read about it within the next few months, or they question why you didn't tell them about it. And speaking of USDA, there's an even better news that goes into effect on June 2nd. They're implementing a new refinance program, and the short story is that it's going to be easier to refinance USDA loans. Now they'll have 3 refinance programs: non-Streamline, Streamline, and the new one called Streamline Assist. For those who qualify for the Streamline Assist, there's no appraisal, no property inspections, no credit reports other than a 12-month mortgage payment history, and no ratio calculations. Of course, there's always those additional exceptions, so you'll probably want to read the article. I suggest that you review your USDA database of loans, run the numbers, and contact those clients who would benefit from the new program, including those who have tried to refinance in the past and couldn't because of appraisal issues. So thanks for viewing. And why subscribe to Mortgage Currency? Because we interpret the rules for you, and because getting a loan approved and closed these days is rocket science.